You're what late, Casey? You're first one. What are you talking about? What late? Nothing haven't even started yet. Stop being sorry. You're awesome. Salute, man. Salute. Okay, let's get this show on the road. In fact, while we wait, give me a second while I post the links and all that great stuff right here. Let's let that linger on for a second if you don't mind. Give me a sec. I'm gonna post the links all over the everywhere so people can join. Sec, I'm gonna post the. Okay, that. Where are we at? Here, go. There's this. Then there is this. Oh, no. All right. Almost. Good evening, sir. Good evening, Ilya. Let me switch over to the chart before I forget that one so you can look at it while it's running, while I'm getting the stuff sorted here. Although almost ready, let's give everyone a second to join in. Let me switch to the live chat so I can see that. Alrighty. I don't know, those who've been following so far should have noticed that pretty much everything played out as I expected. Those who've been following shouldn't have any surprises, so everything kind of as we forecasted, as we saw the other day. Let's look back at the chart. Hey, Rich. Hey, Rich is one of our OGs. Rich, a true legend, guys. A true meme lord. Not a joke here. For the hot girls. As soon as this nonsense that's going on everywhere ends, come to visit me, bro. I promise. Mountains of them. Arnon, hello, brother. Good to see you too here. Good to see you. I'm sorry I'm taking so long. I just want everybody to join, and I know kind of by the numbers when we should start. I don't want people to just wait for too long. Those who are here for the bottom line, and maybe we're gonna be rewatching the recorded version. Bottom line is, as expected, pretty much on track. We've got a bit of a correction, a bit of a breather. In fact, not enough even to close the entire gap. As you can see right here, we have some leftovers of that gap, marking by these two red lines, right? So this is the leftover of the current gap, which is, by the way, not forgetting about the previous one, and the previous one got closed, so we're kind of fine. This is the nearest one that we have, so this gap is not fully closed, and by doing this, by the way, we also partially closed the previous one, so there's a lot of mess right below us. The current trend, I don't have to tell you, it's kind of visible on the screen, both the longer term and the shorter term, right? Which is, you can see the price action. When you're looking at the 1 minute chart, this trend, although longer term relative to the shorter term that we are seeing, it's not that long. It's basically the same equivocal as seeing, let's say the 30 minutes, the 15 minutes trend on top of the screen while being on the 1 minute chart. So even though longer than the current time frame that we're in, not that long. So all in mind. Hey, I have a third of my portfolio invested in Nvidia. Should I say? I cannot answer that question, Varva. I cannot. That decision is up to you. At the end of the day, we're all adults, right? Or at least should be in this industry. Big boys, big girls, deciding to our own selves. Hola there, Felipe. For ourselves, but I'm going to show you what I see on Nvidia, how it falls into the overall game and the overall circumstance of the overall market, and of course you do you. That's kind of what I can advise on that behalf. I can't really advise, I just can show, right? And of course sort of share my own thoughts, but you have to decide for your own self whether you should. Plus, remember, what you're doing there, Varva, is kind of a bit of a fallacy, if I may say. If I can deviate for a second, wait while people load up. Mention that little thing. Notice what you're doing there. You're looking at the question, at the situation at hand, in a very binary sort of way. Sell or stay. long before you guys heard me speak about this, and I was speaking a lot in the Zoom calls mainly. I didn't have the my YouTube channel, thanks to Tom, a true brother from another mother. We spoke about this, and I've explained to him, and this is why, and he understood, and this is why you guys are, why you are getting him sharing that information as well. That's part of a proper account manager methodology. The solution to a problem doesn't have to be binary, it doesn't have to be black or white. You can actually say, well, I will be satisfied if I will take off the table right now an X amount. Oftentimes, 30% ends up being, or again, a floating range of the 30%, it can be a variation of, oftentimes ends up being pretty much the Goldilocks zone. It doesn't mean it will be perfect for every single one. You can adjust. More so, it can be a 34% if, according to your profits, if you're sitting on real good profits right now. Trust me, the mental state that you will have for the rest of your portfolio, for the rest of the duration of your stay in the market, of any processes you'll be doing, will be far more efficient, because you will be able to think with a clear head, so to speak. Why? Because you will not have the headache or the worry of that initial investment, okay? So if that 30% ends up being in the ballpark of your original investment, because a lot of people right now are sitting on a lot of gains and big ROIs, that would be a smart idea that will actually allow you to be more flexible and will give you dry powder for later down the line if things will actually pan out quite badly. Okay, that's kind of general my approach to things. Of course, you do you. Is it freezing, everyone, or just me? I hope I'm not freezing, guys. If I am freezing, please let me know. I hope I don't need to restart the stream. I really hope so, because I don't know how well that thing will go. But I hope it's just Arnon and it's temporary, if so. My pleasure, Varva. I hope that helped. Not freezing, we're good, we're good. Okay, Arnon, I think you just need to move a little bit. All right, so let's continue. Let's do what we usually do here. The intention here is not to dive too deep in our sort of own feelings and opinions about things. It's just to look, at what we see. Basically, first principle analysis, first principle thinking, if you will, prime principle thinking, different names, same shtick. 1 minute, we kind of might as well skip it. I just don't like skipping it because I don't want you guys to think I'm hiding somewhere. Okay, in one of the time frames. It's kind of boring. It switches over a million times. It doesn't matter. It's relevant. Even scalpers like Arnon don't necessarily look at the 1 minute unless they're looking for something in particular. Most people will spend their time on the 5, 15 minutes. There are other time frames I don't have on my screen, but of course other people have on theirs depending on the need. So let's start kind of looking at the 5-minute chart. Nothing too special here. We dragged our feet on the top end, kind of what I expected. Didn't really get the full brunt of this. As I've said, we might not even squeeze out the entire process. As you see, the rhythm of the market is not as you guys perceive it. It's not just up, down, up, down, up, down, up, down, continuous basic rhythm. It's a little bit more complex. I'm not going to dive into it, but generally speaking, what you will see oftentimes, and more so, remember, if one side would be the equivalent of a $100 move, does not mean the back end, which basically on the indicator brings it back to that same location, does not mean a back end move of $100 as well. In fact, it could be 20 up and 100 down. How does that work? It's a little bit more convoluted. I want you to try and understand. And we spoke about this on the other lives and sessions, and in the community we speak about it in depth. Think about it this way. If we say that on most time frames we can extrapolate maybe a couple of minutes outwards, right? For example, if we're looking on the 1 minute chart, we can extrapolate a couple of minutes out, okay? A couple of candlesticks. But we say we can do that on every other time frame. And if a couple of minutes can be extrapolated on a 1 minute chart, but we can extrapolate a couple of candlesticks on the 30-minute chart, and we say, well, we can't really look far into the future on the 1 minute chart, can't we, right? But if we're going to look at the 30-minute chart and we just can extrapolate from the current process one single candlestick, by the virtue of doing that, we can, in essence, what is short term on the 30-minute chart, right, the prediction that we can generate on the 30-minute chart, what is short term, will actually going to be long term for the 5-minute or the 1-minute. So there is a reason why we climb up the scale. Why 5 minutes lowest? Yeah, in essence, yes. Arnon confirms here. In general, 5-minute is the lowest that you're going to look. And if we do switch to the 1-minute, there's a particular reason. It's probably going to be to find the bounds of a gap, right? Because the 5-minute chart will start condensing it, and then you're not going to get the perfect coordinates for it, right? Which we want to have the perfect coordinates to understand what the market is trying to close. In this essence, for example, what we can tell here, that this gap was closed. This hole was closed. Why? Because we had full price action, although it does not show it pretty well here. It should be going this way in essence, that all this price action was the closure that we, the technical analysts, are looking for to say V, done, forget about it, okay? So that particular gap is not a problem, just to put it in some frame of reference. So just as expected, some movement upwards, not enough to even close the entire gap. Started correcting down just as I expected. Probably going to close this gap. According to how much time we still ahead of us, probably we're going to close this within the next, I would say, 30 minutes probable. But because we're at the edge of the gap, of the trend, pardon me, it's very likely that we're gonna shoot back up, basically get rejected by the bottom here, shoot back up right here, potentially maybe even seeing 5,200 throughout this session. It doesn't gonna surprise me, because look, 5 minutes, what we're seeing, the accumulation of some bullish momentum. We have squeezed out the, if we said, remember, the jump rope, right? So big skip, small skip. It's not necessarily going to be one small skip. As you can see here, we had 2 of them in essence that were kind of the saving nature. What they ended up doing, these 2 small skips, is just preventing from the market dropping in a straight line, where to, basically to a lower price and price range, or quicker. Simply, it sort of slowed down that process. So all in all, it didn't do much. Pardon me for stopping. I'm looking at the chat sometimes, guys. I'm trying to juggle it all. It's very difficult. Me, I'm new to investing. I don't understand how things are just going okay, and the straight down to the shitter. Well, you'll have to look up some of the other videos that I've made and kind of get a little bit up to speed. I'm not gonna stop right now and deviate. Because a lot of people here are up to speed. I do recommend you watch the rest of the videos. I recommend you join Discord if you're not already on Discord. Watch my posts and all that stuff. But remember, still, this is not financial advice. I'm just a dude on the internet. And the fact that I worked in the industry doesn't mean jack shit. Pardon my French. I worked with a bunch of idiots in the industry. You'd be surprised. So don't just take my word for it. Do the research. Do the learning. Do the studies. Make sure it's your own sort of you yourself perceive things the way you do, and not you don't just do something because some other dude says he does perceive it in some way. Okay, that's not the right way to go about things. Now let's continue. We're only the 5 minutes, so we want to continue with this 30 minutes. Remember, guys, we spoke about this. I told you this is what we've expected to see. Basically, a breakdown from this stop, right? Starting to correct downwards. And actually, just like I said, it's not going to be a linear process. It's going to be this down, up, down, all in all, more down than up. So we resulted with this. So everything so far as expected, but you can also tell that we haven't really yet converged, and we really haven't yet went through the process. In other words, as you know, oftentimes when we go to that oversold territory, and when we dwell or spend some time in it, we do amplify whatever side that is. Overbought, basically, we move more upwards. We basically almost have, oftentimes we'll have that curvature of the trend up. If it's down, we're going to have that curvature of the trend down. Kind of, well, identical but opposite. So the 30 minutes is still not bullish. It still is bearish. But as we said, all in all, bearish on the 30 minutes. We're probably looking here towards the end of the session and maybe the beginning of tomorrow's sessions. And well, depending what we're going to have overnight. But I do believe we're going to squeeze this probably. But by the weekend, this is done. So all in all, what we can see from this and extrapolate from this is that you see the trend is going downwards, and whenever we end up moving almost sideways, it's bad for the bulls in this instance, because we're generating more open space below us. It's almost like in the cartoons in the community. I make this joke and reference. It's like in the cartoons where you have the character go over the cliff and you see there's nothing below, and almost as if gravity haven't caught up with it yet. And now we're finally realizing gravity caught up with us. The problem is because it's with us, because the institutions and the market makers are aware. And you know what, more so, there is an analogous thing I've brought up on one of my sessions recently with one of my students. The institutions, the good ones, those who know what they're doing, almost as if, let's pretend this is some sort of a soccer match or something. The institutions are all the players on both sides, all the referees and the crowd at the same time. In other words, it doesn't matter who benefits, they are among those who benefit. They just know how to take their positions accordingly. They play all sides at all given time. Okay, that way you always win, or at least you mitigate your losses, because they're going to be adverse to what the market is doing, again, depending on how you position yourself. Those who know, we've been talking about the SQQQ for a while. Very similarly, by the way, on the SQQQ, it was very evident that this correction will happen because we've generated a gap, right? A hole, as we call them, right here. So it's rather normal. We've seen the price action correct downwards, retest that level of psychological 10. It makes sense. The 10 level is very strong. In fact, I'm not going to be surprised if we're going to retest it again, sadly. Of course, I do want to depart from it and continue onwards, but we do have to be realistic about things. What have happened, we broke, as you can see, we had it as a ceiling. We broke through that, but we ended up oftentimes to break through that, almost like a breacher. Hey, Midwest, good to see you here. Good to see you, brother. Hey, Michael. Hey, everybody. Guys, if I didn't mention, I'm sorry. What is that? Longer flam. Hi. No, wait. What is that? Longer flam. Okay. Hi, everybody. So as you can see, it was a ceiling, then it became a support, right? Basically a floor. We then go through the process of testing it multiple times and only then depart. And the fact of the matter that we retested it successfully today again does not mean we're done with it. In fact, we might spend countless more days on this process, and as I said, if you're those who remember from last week's session, last week's live, we saw on the daily that we might project an entire week of upwards movement on the SPX and the rest of the indices. So adversely, we're going to see the SQQQ test. It slows several times. Of course, for me, it's nothing other than having an opportunity to buy more, which I am planning, by the way. Currently, my position is 1,500. I was actually planning to buy earlier today. Sadly, things did not work out. Gene, you're a goddamn legend. I saw right before I started the live. Most of you will not understand that. That's a shout out to one of my students, an absolute legend. Those who don't know what I'm talking about, I have a one-on-one technical analysis class. I teach how to do this sort of stuff on your own. And I'm not going to refer to what I'm talking about, but Gene, you're a legend. I'll talk to you personally about that later. Now, 45 minutes, because I think we've covered the 30 minutes. It's kind of done with, and we can move onwards. So 45 minutes is a time frame I like personally to have, because it's that perfect middle ground of 15 minutes between. It's like basically the differential here is 30 minutes. So you got 15 minutes, sorry, you got the 30 minutes, 45, and an hour. So it's almost like this progression, natural, very smooth progression between the 30 minutes and the hour, instead of just switching this way, which oftentimes can be sort of very jarring because they can be very different. At times, this helps. It gives you this middle ground in between. So 45 minutes almost implies the same idea of the 30, but we also have to consider that it's, in essence, it amplifies it, right? So we're also saying that if we're seeing 30 minutes on the 30 minutes chart, still a movement downwards, still momentum downwards. On the 45, it's even further amplified. In other words, also doesn't really expand on how far we can project through using this time frame. All in all, it will give us roughly the same assessment. So it's just to have a more balanced view of what's going on. And oftentimes it helps looking through whether the trend is readjusting, okay, whether the short term or longer term, where the again what the structure is, how it gets readjusted to the price action, where the gaps are, and so forth. And of course, according to this, we realize, well, what are we looking at on a slightly longer time frames, and according to that readjusted support, we can see, well, if we just drop down straight, we hit 5124-ish area. Okay, that's the bottom of the trend line. Of course, we have some gaps there. As you can see, this gap, these green lines represent the gap that was not closed from before. We referenced it, so it's not going to be that surprising if we will slip in. Although I do not think, unless we're going to have the equivocal of a power hour, just negative. Arnon, maybe you can write in a couple of sentences there, what do I mean, if it will not be clear and people have questions about it. But basically, oftentimes, those who trade and follow the market on a granular level on a daily basis notice, or those who, again, follow more closely, in fact, notice that often towards the end of the day, in the last hour of trading, out of nowhere, if we have more of a tame day, you have more volume come in out of nowhere, and we can actually have the opposite of it. In other words, we can have more of a tame day, or kind of a tame day. It's all relative, and then a big volume, basically wave of volume come in. It doesn't have to be bullish. It can be also bearish and cancel out what we've done throughout most of the day. Do I think we're going to have a power hour? Actually, could be. I'm not gonna lie, looking at things how they are, according to how much time we have left until this candlestick gets locked, because it's 4 minutes away. You can see right here below the price action, meaning this current candlestick, the 30-minute candlestick, will get locked within 4 minutes. We're probably going to see a similar phenomena, by the way, on the 5 minutes, but guess what? It will not look like that on the 1 minute, because the 1 minute runs by a case of 1 minute by 1 minute, right? So just for you to understand that, it's a little bit kind of important to understand how the time frame is readjusting. And also remember what I've referenced earlier. So if we can project outwards, even just a tiny bit, even just a single candlestick on the 1 hour chart, we can project far on the 1 minute chart. Try to keep that in mind and try to readjust it to a single almost equation in your mind. And there's a reason why I show you these charts by this gradual process of moving outwards, so you can almost see how we look at something and how it looks like when we zoom out. Oftentimes, I actually don't recommend going that far, that deep, and all the way out. But for the current situation, it actually is beneficial for us, okay? Now, give me 1 second. Now, let's continue. We've looked at the 1 hour chart. Let me switch back to the 1 hour. Remind you guys what we see here on the 1 hour chart. We're still seeing a lot of downwards momentum, right? So in other words, even in the context of saying, well, we might see some leftovers of that 45 minutes, because it's, as we said, longer than the 30, 17 more minutes of downwards movement, plus then some, right? Because we can see from this, so 1 candlestick, and then at least another one, if not 2, we can project from here on out. But more so, we can see in the overall frame of reference in the 1 hour chart, which kind of allows us to project sort of further out, we can see that this one little bit, right, this entire movement represents, really on the 1 hour chart, it's just this one little bit. In other words, we have a lot ahead of us. So it's going to be very easy to project and to see how we can see how we're going to drop to this support, and more so break through it, and in fact probably test into that range that is leftover gap from before. Let's see if we can see it here on the chart. Yeah, we can actually see the leftovers of that gap. It's right here and has not been closed yet. In fact, more so, I'm interested why this gap does not show up, because I see another one right on top. In fact, we're technically right inside of it. Let's mark it. You know what? Let's mark it and see whether it's gonna, where we are relative to it. Well, actually, it should go. You know what? Let's take the top just so we'll know the range, the empty ranges, if you will. In fact, we might as well say that this gap was closed, right? So this is not that surprising in the whole context of all things, all done and nice and dandy. Let's remove that for the time being. We don't need that. Continue. 4 hours. Okay, 4 hours, which is something I've told you before, and I said this. If those of you who do not trust me on, just kind of think, well, Greg, you're lying. You didn't say that. Go to my previous videos. You'll be able to see that this indicator was showing basically this indicator, this part of the indicator, the K, which is the blue line, which is in essence our bullish momentum, was basically positioned this way. It seemed as if we're gonna continue running upwards, and I was warning and saying, no, guys and girls, what we will see here is a convergence of the forces, right? Because we were seeing it on a smaller time frame. It's the same trick, but increased time frames. So in other words, what we should be expecting here, and as I've said and predicted back then, we will see this convergence once that orange line becomes dominant. In other words, goes on top. We have this convergence and divergence. They start diverging outwards. What we will get is more bearish momentum. So this is, in essence, amplifies our predictions that we see on the 1 hour. Earlier, throughout previous sessions, previous lives, it was problematic. It was contradicting. In fact, so again, an untrained eye would be hesitant to trust me, say, well, Greg, maybe you're wrong. Maybe the 4 hours is more correct and more dominant. More so, I will tell you that this is not necessarily indicative of anything. It might as well cross over, then cross over again, the same way it does here, and then continue up. But again, we will look to sort of read into what is more likely to happen with this on a different time frame. Okay, we're gonna look further out, try and see and perceive. Well, again, and here we're seeing something similar to what we saw before, and more so, I want to reiterate and emphasize. Remember that these when this indicator, when it does move into the oversold or overbought territory, amplifies. Okay, it amplifies significantly so the current behavior, even though you have these switches, these conversions and divergences basically go through the process, and it seems as if we're bullish, but bullish in oversold territory is nothing other than a correction, other than a breather. So in the context of things, we are still very, very bearish, right? But these bullish moments allow us to have breathers. So what we're currently going through is nothing but a breather, and more so, I would believe that we will have another convergence and things will become bearish. What does that mean to us? That means that at some point, in my opinion, we will break down to this gap. This will allow us, this momentum, this lacking sort of movement that is missing right now, this movement will allow us to correct back up to this resistance, right, to the ceiling of the previous trend, if you will. It's going to be previous once we switch over. In fact, we technically already switched over, but who knows? The same way I'm not going to be biased, guys and girls. The same way I say, well, we can slip out and correct then back into the trend, right? And well, who says we're not going to do this time around and overall we're going to retain this trend upwards, right? Who says that's not the case? In my opinion, what you're seeing conveniently for me, the other tool, the longer duration trend, actually has reactivated and well, or finally decided to show up, and we can actually recognize something very, very interesting on the screen right now. That technically what has happened is the price action has dropped to this support. You see, we were not in the middle of nowhere. Technically, there was a longer duration channel here. We dropped to its support, tested. There is an SMA here, okay, simple moving average. It also shows, and unsurprisingly so, we kind of tested the level. It fits. We went into a narrow channel, although a channel on an incline, broke back out, tested the next best strong resistance that we had, which is, just to put it in frame of reference, is this diagonal line, right? That diagonal thing. And now we already corrected downwards, right? So we've done basically down, up, and now we're already moving downwards. I'm just kind of breaking it down through so it will be more visible and understood. And now we're saying, well, we have more upwards. So from that, we can extrapolate that, well, potentially, since we do have several supports and resistances, we have several sort of layers, we still have leftover of a gap, we have certain chores that we haven't finalized from before. It's not going to be all that surprising, all in all, if we're going to try and make it back up and hit that resistance, maybe even try and make it all the way to that level, to the 5372.81-ish. Not, well, again, I wouldn't say that's properly accurate to where we're going to stop, but give or take. In my assessment, and you'll see in a second why I think really what's going to happen here is more downwards action. You see, all the upwards movement, all the bullish momentum that we see in the system right now is more or less a correction. Very similarly, and I keep on reminding you guys, when the trend is moving up, we have some corrections downwards. And this might be one of these, but currently the rate of movement and what we will see on the larger time frames implies that that is not temporary. In fact, just like the thumbnail says, guys, I'm not trying to clickbait you, none of that nonsense. This is legitimate. It seems like this is only the beginning. It's not an opinion. It's what the indicator that I now ran through multiple days in advance and show you that it works. It doesn't hit the bullseye perfectly. It doesn't hit between the eyes, so to speak, but it hits close enough to do the job, right? Now, look, weekly, we expand. As we said, remember, daily, well, we can get this done within a week time, within several days. Nothing too crazy. I projected we're going to spend most of this week actually doing this. We have not. We still have that movement to be had. That means potentially next week will be spent on doing this, or the transition between this week to next week, right? So again, those who expect the SQQQ to just, that's it, from here on out to the moon, that will be as childish as the people who say, every bump that Tesla has upwards from here on to the moon. By the way, I told you so, 200 and trying to move downwards towards 150. I told you so, I told you so, I told you so. Now, does that mean that's it, we're never going to see the ceiling again? No, right now, in fact, to kind of have it in a matter of a healthy perspective, we are right now moving within the attic. Okay, that is the attic. This entire range, this entire level is the attic. We're still inside of it. It doesn't mean that we might move back up to 200, right? 230, sorry. What would seem like a very bullish move, and everybody will start screaming, Greg, you're wrong, no 150, hell no 100, that's definitely not gonna happen, blah, 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 blah. As a very great YouTuber I really like says. But no, guys, that's normal. Again, as you see, we've done this before. In fact, the current trend implies that we're probably going to retain it. And if you go to the same practice we're just currently doing with the indices, with the S&P, with the Tesla individually, you're going to find the same result. Why? Well, first of all, because Tesla is a chunk of the S&P, and more so, I'm sorry to say, it's a simple analogous situation. When it's a tsunami, everybody gets wet. And more so, actually, I have here a chart that shows perfectly how the entire market moves in tandem. What you have here are several variables. You have the SPX, which, guys, stop going to the SPY. The SPY is deformed. It's not going to give you a proper indication of what's going on. I said this before, I'll say it again. It will be almost like, if we want to have something analogous, real world analogous to what I'm saying here, it would be like cheating off of somebody who has a completely different test. Don't do that. Or not, I mean, not completely, but at least different enough for you to get all your answers in the wrong place. Okay? Don't do that. Now, what you can see here are several assets, and they're all rebalanced. It's all very simple. You're seeing SPX in red, in the candlesticks formation, right? In red, well, it is red. So Tesla in red, IWM, Russell in yellow, and purple is Palantir. You can see they all move in tandem, although each and every one, of course, has its own sort of added factor of its own trading, but in the context of the overall market, that volume is insignificant, right? It can deform the movement. That's why every single movement here looks slightly different, but overall, they move in tandem. Even a blind person can see this. No offense to blind people. You guys are awesome. Now, so as you can see, the trend here is downwards, very similarly to what we sort of spoke about in all the assets altogether, right? Even though right now we're looking on the 1 minute chart, but it's very indicative to where we're moving right now, and let's say into the next 15 minutes or so, if to be objective. Let's go back to the time frames that we're looking at. So we were at daily, right? Monthly is very important, because on the monthly we realize, and we say, as we said, so weekly, sorry, pardon me for the mistake. So as we said, if we can do whatever movement that is dedicated to whatever direction on the daily, it's limited to our ability to project outwards. Remember, we can do the same thing with the weekly. Weekly implies here that we have several weeks. So anything and everything we can do in several days can be then mitigated in several weeks of the opposite movement. So this is, again, stronger than what we see on the daily. Be objective about it. In fact, here it implies that we are going to probably close this gap, which makes it what we are seeing, in fact, through the smaller time frames. It's almost the projection of the noise that we're going to have, and this process of closing all the leftover chores and gaps and nonsense that we have left right here within this range right before we move downwards. And in fact, this is a healthy move downwards, because if adversely we're going to see what we recently have been seeing on the bullish movements, basically 5, 6, 7 candlesticks on the weekly chart. So basically that would be the equivalent of 7 weeks down. That's abnormal. That's unhealthy. So in fact, if I really want to project, and I expect through my positioning subsequently, I want to see a healthy move downwards, I want to see it in such a way. I want to see several sticks downwards, several, or at least 1 or 2 up, just corrective, a rebound, a cooling off period, so we can continue then downwards in a healthy fashion. Okay, and the reason I'm positioned downwards is not because I'm bearish. I'm not a perma bear, not at all. In fact, during the not great time around 2020, 2021, I've predicted the bottom. Some here can actually vouch for that 2 months in advance, when the rest were tremendously bearish. So am I a bear? Am I a bull? Overall, by the way, I'm very bullish on the market. I'm just realistic, and I just call it out as I see it. Okay, play a role in the market in free mode due to jobs. Can see partially of your part of your comment there, Dave. Hi, Dave. I see you're referring to the job sector, but I mean, no, there's a lot of I shouldn't do this right now, and I'm not going to, but I say these reports are highly manipulated. I highly recommend, if you're not on the Discord, join the community. We talk about these sort of things in depth, and it's not necessarily, if it's from the CPI, we're not saying the reports themselves are manipulated, but if we're talking, for example, the CPI, it is the weight that they give to the different parameters of the CPI, and they adjust it so they will get the result they're looking for. So that's very bad cheating. Those of you who played video games in their past, or still do, in strategy games, when you build a map and you make a skirmish and you make it so much so adjusted to your own side that it's just boring, right? That's just kind of how they're playing this game, if you will. That's about that. And more so, remember, the unemployment claims are just the people who are eligible for unemployment. Doesn't mean that's the actual number of unemployment. The jobs reports you really need to break it down and understand whether they are or not whether, but rather you want to notice whether we're right now having full-time jobs go up, and basically more full-time jobs being filled, or any at all, in fact, or what's the relativity between the two, or are we actually having part-time jobs, which are a strong indication of a recession, because people are so struggling to make ends meet. More indicative of, actually, although there is a debate about this because of the current generation and how they work in general. But still, remember, the older generation, slightly older, I'm talking, beyond the teens and so forth. It's not like they're gone from the job market, nor as if they don't need to work. So when we're seeing part-time jobs being filled, and these are the majority of the current openings and the ones that are actually people are going for, it's very indicative of a recession, simply because people are struggling to make ends meet, so they have to get a second or third job for it. I'm not sure what the conversation there, Michael, but I like it. M14, no, you probably wanted to say an M16 platform, AR-15, or M4. I am kind of an armorer in my past in the military, so sorry for correcting you there, but you're probably talking about M16 or M4. Pardon me for that, ladies and gents. Sorry, I had to clear my throat. Power hour. Okay, I went too far, I see. Okay. Dave, Varvar, something to one-on-one with you. Talk to me on Discord. I do a Q&A with anybody who's interested. I still have several new spots. In fact, I just had two new students finish the course. That means I add these two new empty spots to our Patreon and YouTube members on the Discord. These are, you guys get the spots first. I currently have one spot for the public members. If that one will be filled, and I'll have like a spare from the members. We'll see how I'll adjust that. It all depends on how much you guys want the course. Of course, I'll be able to adjust my schedule accordingly. Also very, well, that's not important really. Let's continue. Let's just continue. Let's keep things on track. Things are starting to become very interesting here, by the way, on the weekly. We can see the weekly trend have been retained for quite a long time here. And some of you would argue, well, Greg, who to say that we're not going to correct back up, right? And this, so right, Greg, you're right. This is what we're doing right now. And who to say we're not going to do this and then correct back up, and this will be this movement, and in fact reach new higher highs. And actually, coincidentally, that matches very nicely with Tom Lee's projection around the 5,800. Can be. I doubt that's the case. There are harmonic patterns that are a little bit more convoluted and complex than just head and shoulders and flags and all sorts of stuff that imply that that's not the case. In fact, we're already in the process of the turnaround, so I don't think that will be the case. Actually, let me bring it back and keep it there. That's kind of Tom Lee's projection, and it could be, again, I'm going to be completely honest with you, it could be from the standpoint of what we have right now, from the standpoint of what we know, but in a couple of seconds, I will show you something that makes me see and think that what's going to happen here instead is, if you notice, we haven't been forever in this trend, and we switch over from trend to trend. And although it's bullish, as much as you would like it to continue forever, sadly, my opinion here that what's going to happen is we're going to switch to the next trend over. Sorry, pardon me, English much, bro. Third language, sorry. So yeah, I do think we're going to switch to the next trend over. In fact, the next trend over doesn't necessarily have to be diagonal in the same way. It is a little bit more complex, because basically the next trend over could be a complete breakdown of this trend until we find a new trend to catch on to, and it might give us sort of, we will skip several trends while doing that, just to put it in perspective. And in fact, we're going to see why I'm saying that in a couple of seconds, right? Because we're going to look again larger time frames. I think, guys, nobody can you do some analysis? I will look at Tesla. I think I kind of looked at Tesla a second ago, but it doesn't matter. I will. It's roughly identical, as I said. What I've meant to show here by showing you this, what I'm giving you in essence, when I'm going over here on the S&P, and look, that's the same S&P, it's just that this chart has kind of a, well, right now, just to put in a frame of reference, right? They still work in tandem. Of course, they're every one individual price level, but all in all, if the environment, that's kind of what I was calling out, right? If it's a tsunami, everybody gets sweat, and if everything is going to be going down, Jesus, you're with me, yeah? Tesla will be going down as well. It's something. Look, I'm sorry to say, but no, if it's a train wreck, right, all the carts are going to be affected, if you will, to put in really simple terms. Or if it's a flower and the soil is poisoned, unless you're some very special flower that thrives on that pain, S triple Q, S triple Q. To each their own, not financial advice, right? Everything else will get wet if it's a tsunami. And again, let's continue with the overview of the S&P and the overall indices. So, and I might as well could have added to this chart, added the Nasdaq here, and you would have seen still, all in all, it's identical. Again, they're not identical the same way both of your ears are not, right? If you really compare them, you realize they're slightly different, but you are still symmetrical. You have two ears, one on the left, one on the right, and they are mirrored and seem identical, if you will, right? Generally speaking. In essence, what I mean, look, generally, for example, all of them went through a trend up in the general same vicinity. All of them generally going down in the same vicinity, right? It is, they move in tandem, especially now when the market is affected by the same forces. It's not a coincidence that things are working out this way. In fact, there was a moment, some maybe here know, those who are more OGs to the community and heard me say that before, I've referenced to how I've seen at a certain moment how certain assets deviate, right? Kind of go on their own way, which is more of a healthy indication of a healthy market. There a short period of time, very short, it was about a couple of weeks. It was a handful of, well, not a handful at this point, it was months ago, that I in fact emphasized, I think actually, to be really precise, well, months ago, now that I think about it, it was somewhere in the beginning of the year, during the beginning of 2024, or probably the switch over between 2023 and 2024, that I saw some of that departure from that in tandem movement. And I've sort of reiterated how important it is to the community, and this could be a healthy indicator, but it kind of faded out within a couple of days, I think, or weeks right after I said that. So is this just now or like most of this time? I'm not sure what you mean there, nerd. I'm confused about the question. Is this just now or like most of the time? What is that? I am confused. Let's continue, because now I'm confused. If you can read, there's the move. Good question. Wow, actually, okay. Now that I understand, that's a wonderful question, nerd. I will say since the troubles of 2019, right? Kind of since that hurdle started happening. Well, first of all, it is more common that we move in tandem in one way or another, but what you need to understand is this. The indices need to be permissive, so the assets will be able to be bullish. You will definitely not gonna find a circumstance, it is beyond abnormal. If you think and calculate the numbers and liquidity that is required for the individual assets to overcome what the indices are doing, right? The individual assets over the indices, it is mind-boggling. Nobody will put that liquidity into the individual companies, and then the individual companies will also kind of correct the index, so it's going to be visible through the index as well. It's a bit of a convoluted equation. You need to be able to see all the moving parts in order to understand what the end result is. But all in all, it is basically impossible. It is almost like saying I can tug an elephant. It's just not going to happen. The elephant is going to win no matter what. It goes in tandem with 2, 3 multiplied. That's what we call it. Yeah, I mean, you're talking about your realm of things. Again, I'm not diving that. That's for 3, 4. Okay, yeah. I mean, well, SQQ is 3 times leveraged or levered, however you want to decide and call it. But let's skip that, because we're not gonna finish this video forever, and I want you guys to be able to go eat, rest, and do whatever. So let's focus on the conversation, the task at hand. And here is the peak of everything that I've been implying and saying. That switch over is very slow, more so you can see that one trend over, one channel over that I was implying actually is part of the longer duration channel. You can see that's the lower end, and only then, when we're gonna end up testing this bottom, subsequently eventually breaking through the 4818, there are also a couple of strong supports and resistances right here. I don't remember exactly what they are right now. I'll have them on this chart. Let's see if I maybe have them here. Well, we have that's right below. That makes it a range as well. But in general, I do remember we have several things here kind of in line. So I'll make that level difficult. Let me just remove and clean it up a little bit, so things will be clearer. So I do expect, first of all, not a direct breakdown to the bottom of the trend line, right? Not a direct breakdown this way. Of course, there will be still supports there to be tested, meaning we could see this wedge being tested, break back down, potentially break another breakdown. And the thing is with this, as we've said, as we can project several candlesticks out, not further. In this particular instance, we can this could end up being, by the way, a single candlestick, just to reiterate and be clear about things. Although that would be very uncommon, I do expect these to be at least 2 or 3. In other words, what we could potentially project here are up to 3 months. Okay, that's kind of a novice analyst or a novice person who looks at the charts and not really familiar with how these movements happen or how long they might take. I can tell you that this particular movement can take 3 months, and in fact it can actually be longer. I wouldn't compare them to the movement upwards, because there's a reason why Tom and I and everyone else in the industry keep on saying, if Tom likes to say we go up in by the stairs and we drop down via the elevator, right? So in other words, we walk up very slowly and we drop very rapidly, right? So the time duration that it will take will be far shorter, right? And I wouldn't even say take an indication from this, because this within itself is also not necessarily indicative, right? We more so want to focus on our speedometer. We want to focus on our momentum and how much more momentum or gas we still have left in the gas tank to move downwards. That's the main focus, and only when we drop down, test these areas, understand how they correlate to what levels they correlate on the actual price action, and then we can assess whether we're going to start correcting up into the same trend or actually moving into the next one, or we're going to have a complete breakdown of the trend and a change of direction. I would still recommend, of course, those who know me more or less know that I recommend working, of course, with a one month chart. It makes things singular, very readable, and all that wonderful stuff. But because not everyone are familiar nor understand, we still want to have the context of everything. We're going to do this by the book. We're going to look at the 3 months, and this is something I've reiterated. This is sort of where we have something similar to what we had right here. Well, that was the weekly, pardon me. That was the weekly. No, that was not the weekly. That was the daily, the daily, where I said, look, I know how you think things are going to flip over here and it's going to be a movement up, but doesn't necessarily mean that. We might have a convergence, divergence. Here we're starting to see something very similar. But more so, I will reiterate that on the quarterly chart, basically what you're seeing doesn't necessarily work the same way you're familiar with on the smaller time frames. You can almost recognize a trend of its own within the system, within the indicator. So what I will argue here, and you can actually see signs of it. Let's blow this up so you can see this convergence, very similar to, where did we have that? We had that, what was that, on the monthly or weekly? No, where the hell did we have that? I think that was this one. I don't remember. But the point being, as I've said, we will. Here that was the 4 hourly, where instead of you guys thinking, well, it's probably going to pan out this way, really what happens here is this convergence, divergence, breakdown, right? So this is a very similar situation we're starting to see here on the 3 months. In fact, we're starting to see hints of that starting to happen already. Why? Because we know the smaller time frame is breaking down, and this is just not, it does not transmit as quickly. So this is going to take longer for us to actually get the result. More so, we know we have an entire month and 24 days before this candlestick gets locked. In other words, before we see the result with this convergence and divergence. So we're in the process of the turnaround. Look at it this way. On the larger time frames, it no longer becomes this, it's almost like on the smaller time frames, the really small ones, it's almost like a scooter, then it becomes bigger like a bike, then a car, and now we're basically at the level of a bus. This turnaround, this process within itself is a very slow, takes a very wide range of a turnaround, so it takes time, right? But still, we want to be aware of it, and more so, you are going to recognize, again, similar process. In fact, you can recognize it far clearer how this 3 months, right? This process is basically a smaller scale this process, right? This is an interpretation of. In other words, all we have been doing all along, we had a downwards movement, a breather, a correction, and we're going to continue downwards, as we're already seeing it converge on each other, as these processes are not linear. They're gradual, if you will, to put in simple terms. And right now, we're about to switch to the scariest chart. The one chart that you need to understand it, in essence, what this chart is about to show you says that none of these matter. Okay, you need to remember, and there is no, you can look it up, you can try and figure and understand how these methods work, and the way the 12-month chart or the yearly chart is structured is so strong. In fact, it's so indicative of what we're about to have that there are no two ways about it, really. And that's very scary, because what we're about to see here is this. Okay, that's a yearly chart. This, in essence, shows us, all in all, with all the nonsense that we humans can take and do in the process of a year, okay, all in all, this is the bottom line. As we can see here, unlike on the uptrend, we're not really having any convergence here between the two forces. In fact, the bearish forces are very dominant, and only now we're starting to accelerate. Remember, the real effect will start coming through when we're gonna hit that range and more so penetrate in. And I want to remind you all, just to kind of put things in perspective, if last time we've done this, right, just to kind of let's put this in a range, right, that took 3,653 days, and I'm kind of ballparking this, right? And you can see what it resulted in. And we're talking here about, well, the dot-com bubble, we're talking about the prime real estate bubble, we're talking about all the side effects, right? We're seeing how this process wasn't as linear as we thought. And you know what? I'm going to say the following thing. Even if it's going to look and appear as if on the 12-month chart it's going to be quick, that quick means up to 3 years. Okay? 3 years. Ladies and gents, we haven't even got there yet. And if you also are attentive and realize how far out of the trend we are, this is unhealthy. I expect the market to correct significantly so. Now, you're going to say, well, Greg, are you really saying that it might correct to the bottom here into these 22s? No, it doesn't work that straightforward, especially when it comes to the yearly chart, although naturally we will be moving and progressing to the right side, not to the left. Why? Because time moves to the right and it doesn't stop. In other words, the chart will never move truly to the left. So this is an abnormality. The fact that we break out of this trend to this side of things, it's not abnormal as much as it's abnormal to how far we did it. Okay? We kind of overdid it. There's a larger idea here at play, and I will kind of secretly reveal to you that this linear regression is inaccurate, and the actual trend is actually somewhere, well, that wasn't well as well, it's actually somewhere along this area, right? So we're not really all that bad as you guys projected. I know the current trend appears to be limited to this range, but it's not true, and this is why I often say, guys, learn how to analyze on your own and don't rely on automatic tools, because believe it or not, more often than not, they're stupid. There's a reason why institutions sometimes own entire companies that their entire dedicated job is to create software for these institutions. Okay, and some of them rent software from such companies, such software companies. It costs them in the hundreds of thousands a month. Yes, it yields accordingly, but yes, there's a reason why these very good bots, which also don't always get things right, cost so much so. So trust me, whatever bots we can come up with on TradingView, even in the premium accounts, are not all that, with all due respect to them, right? So all in all, I recommend learning how to do these processes on your own, how to be proficient having gone through your own analysis, analyzing the charts on your own, and subsequently making your decisions. I'm never going to say it's a bad idea listening to people. I know everything I know because I've listened to the right people. I've asked all the dumb questions several times. Okay, if you want to call them dumb questions, there are no so dumb questions unless being troll. Unless you're trolling, then it's a dumb question. That's the only way a question can be done. That's it, ladies and gents. I think we kind of ran through the course of everything that I wanted to show you. So all in all, yes, even if we are going to have temporary noise, right? It's temporary noise. All in all, the market projection is to move downwards, right? Enough for us to realize how much what we had so far is merely the beginning. Right now, by the way, we're going into power hour, and you know what? More so, I'll say in the context of everything, in the context of today's, how things played out. Let me just kind of take a quick look-see here. We still might have it because, again, 5 minutes, well, more or less, yeah, it does seem like we might have a decent power hour, a bit of a correction to that median, and more probably than not a correction down. So that will be the last 30 minutes of the price action of the trading today. It seems far more likely than not, once we've done with this process, as I've just said earlier. All in all, it's going to result in a spillover where the bottom is now lower than before. And yeah, even if it's just the temporary one, right? Even if it's just the temporary one. Steve-O! Hello! Hello! That's so awesome. I'm sorry I'm yelling. I apologize. I'm just excited to see some of you here. Thank you guys for showing up, by the way. I hope I've been able to contribute to your own analysis, to your own knowledge. I hope you enjoy this as well. Don't forget to smash the like, subscribe, comment, and all that wonderful stuff that YouTube likes. Guys, guys and girls, questions, because I will be ending the stream very, very soon. I appreciate you guys saying so. Thank you, Nerd. Thank you, Midwest. You're a legend. Always showing up for all the lives and all that. Hello, Useless. Good to see you here as well. I hate to say, I just hate to call you Useless. It's just such an unpleasant feeling. You really need to change that nickname. Make it to facts, Just straight up facts. That's what you should be. Straight up facts, bro. Yeah. Great show. Thanks as usual. My pleasure. My pleasure. Questions. Thanks for sharing. Sky. I don't think I've seen you here before. Maybe I'm an idiot, but hi, welcome. Analytic, hi Alpha, good to see you here. Trend, does it need to follow the downtrend? What can reverse the trend? Well, I'm assuming you're talking about the overall thing, since as we've already seen, everything is moving very much in tandem, Nicholas, right? Well, honestly, at this stage, nothing. We kind of, well, those who follow my videos and have been following, and the community and all that, know I've been saying, look, the Fed had a lot of opportunity to correct the situation, okay? Why do we know the Fed are too late? Well, we've seen inflation not being stifled down, not being stifled out. It's almost like the same equivalent, right? An analogous situation where a doctor administers a certain amount of medicine and waits to see, right? Because you don't just administer the medicine and you expect to, immediately everything to be fine, right? There's a process of healing. And that was this process of we administered the medicine, we created a lot of pain to the system in various ways, in all the possible ways. In fact, job market, inflation, all of it all together. And the result is that we didn't arrive at our destination. It's all about the destination. The destination is the 2%, right? And more so, we know, we can look at facts, at face value and say, well, inflation is not 3%. And more so, if you look on that underline, right, you realize that it's funny to remove food and energy out of the equation, honestly, all in all, if you think about it. Why? Because this is the highest spending of us people and the most expensive thing we spend on and the most we spend on at the end of the day, right? Because everything is energy in one form or another. Food is just the thing that we spend on the most because we need it, duh. And it's a bit kind of just, it really is almost like ignoring the problems, right? And saying, look, everything is fine. Just seeing only the good parts of things and saying everything is fine. No, you have to look at reality. And when food inflation is just bonkers, that it feels like it's 200, it's at least, of course, there are different arguments, but some people argue it's at 20%, where people are paying up to 4 times, and we're not even mentioning the shrinkflation factor, right? Because it's technically it's more than 20%, right? Because what you end up doing is paying the higher price for a smaller amount. So if you calculate the amount you should be, like how much you should be paying for that amount, you realize that it should be significant. It should be almost equalized, right, to what it was before. But really what you end up doing is still paying, and paying a lot more. So it doesn't make any sense. And we're kind of know that we're late because we haven't made our target. In fact, things are actually getting worse, and more so, as Aaron and I in the community, we said and emphasized, if you go into these reports carefully, the jobs reports, you realize that most of the jobs are temporary jobs. We are, like, all the alarm bells that should be going off, signaling a recession, are going off and have been going off for a long time. It's just that now they're hard to ignore because they've been going on for a long time, right? The yield curve, all the inversion of the yield curve, all of the elements, the sum indicator, all of everything. Notice, and in fact, it's surprising to me how some people can still be, I guess, donkey-like stubborn, right, and say no, Tom Lee wants what's best for us, showing up on television. No, guys, if he's dumping, he cannot be telling you everything is shit because you're not going to be buying. Remember, the market is a zero-sum game. It doesn't make any sense. Let's see. Is Lex terrorizing you guys? Remember, I want everybody just to be respectful. Let's see what's going on. I'm probably missing out on what's going on. Nicholas, I hope that helped you and answered your question. Guys, slow it down. I can't keep up with you. You can just DM me on Discord. Yeah, just DM me on Discord. We'll have a call, one-on-one voice call. We'll get to know each other. I'll scare you with all the scary stuff. Make sure that you actually want this, that you're really interested in knowing and having the skill. And if so, we will proceed onwards from there. No, useless. It's so unpleasant. You don't know, man. You really need to change that nickname. You're such a great member. You always show up. You're always such a pleasant member. Like, no, man. It's such a. Ugh. Please do me a huge favor. Change it. So I missed the video, but we'll watch from the beginning. After you end it, you want to think about Tom Lee's prediction into small caps. Okay, so Lex is not terrorizing. Lex, sorry for assuming. Lex, you can reach out to me and I'll tell you exactly what I think and feel about this all. But I've spoke about this in the previous videos and previous lives. Look at that so-called rotation objectively. I mean, yes, I know Palantir corrected, but remember, the ceiling is 2907. We didn't even make it fully to the ceiling. Like, all that excitement, guys, all that amazing earnings didn't bring us back to the ceiling. And if anybody has doubts, we spoke about that ceiling before. I've mentioned it many times, and I said, well, if to sort of believe that will be any movement, I want to see a breakage of the 2907 moving to the 3007, which coincidentally also has this 30 right adjacent to it, which will make this entire level like a minefield. In other words, no. All in all, it's nothing. It's just noise. Love you, Lex. Useless. Treat Lex with respect. He's one of our... I can already call him an OG. He's a good member. We love him. And yes, Lex, go to sleep. What the hell are you doing awake at this hour? Should know. You're fine. It's not that late yet. It's still... Sky, yeah, just recently. Good to see you then. Good to see you. I hope you're liking what's going on and you learn from this something. Of course, none of this is financial advice. You're all adults. Nobody will, advise you on how to handle and manage your portfolio better than you will for your own selves. But you do need the knowledge. You do need there's a reason why portfolio managers and analysts exist. We do exist. It's not, just for show. Well, at least some of us. You're in the nights? Okay, gotcha. Ellen, it's you! You probably said this before, but I'm an idiot. Love you, Ellen. Also, another OG terrorist of our community. I hope YouTube doesn't punish me for saying all that stuff. It's like, no, they're friends. No, YouTube, you don't understand. Guys, questions, anything you want to ask, now is the time. Although I think we've kind of covered it pretty well. We can observe the following hour and see how things will play out. I don't think anything too surprising is going to happen. As I said, we kind of squeezed out most of the upwards momentum. We might see a bit of what would feel like a bit of a sideways movement, right? Because we're going to find the bottom potentially somewhere here, move again into one of these, what would feel like a wedge, like this triangle shape, almost this bearish flag, by the way. Those were familiar. Could be. Looking at the time still and how we have everything, because we're probably going to make it to the middle of the flag, best case scenario, before we switch over to tomorrow. So sorry for the hiccups, guys. Sorry. All right, guys. So again, questions, anything? Market higher September 1, yes or no? That's a judge or AJJ. That's a weird question. If you new here, you should know I don't make projections of that sort. I don't do options. I don't need to decide whether it's going to be up, down, or where it's going to be particularly on September 1st. We're very far away from there. But the overall, it doesn't matter whether it's going to be slightly up, slightly down. It needs to be a lot up at this current position for it to matter at all. And all in all, it doesn't matter. Like I said, even if it's going to be slightly up, the end result is that we're going to be a lot down. And I don't know if you've been following or you know me, my projections so far panned out quite well without me trying to estimate exact points in time. That's not a smart practice. And yeah, but let's deviate from that question. Is there any indication for tomorrow? Excluding black swan events. See, good question. Let's look. Let's try and figure out. I mean, all in all, I think I've kind of explained it through what I've spoke about as we were going. All in all, the projection for tomorrow is mainly bearish. 30. It's mainly bearish. The projection for tomorrow is mainly bearish currently. Again, I'm not gonna call black swan events or whatever swan events or duck events. I'm just gonna call it momentum events. Simply what I'm seeing is the momentum is now more switching over. The 1 hour chart implies that we're gonna have a good handful of hours down the line on the chart, but that depends. You see, it's very difficult to say because of what we see right now. This, in other words, will be squeezed out during the post-market and pre-market. By the time we make it towards the morning and the market open, we might be already in the position of a switch over. And if the 4 hour, which is more dominant on the 1 hour, will not be more indicative on the downside, we might see some movement up tomorrow first, moving towards the closure of the gap as I've mentioned, only then retesting and only then wasting another day or the end of the day towards basically right now. Why do I call this wasting time? Because we're retesting levels we retested before. We're simply stuck in them because they're very powerful. And my projection is that we're moving overall down. Is that right now we're wasting time because we're forced within between these levels. So what's the Russell look like? This type of it's the same thing, Lex. I've shown you were not here probably, but they all move in tandem. Look. Listen to this chart. It has the S&P, Palantir, Tesla, and IWM, the Russell. Okay, look at this chart. In fact, let me make the S&P into a line chart so you can see. Okay, so you can see how much in tandem they all move. You see, all in all, it doesn't matter. Even if one had a bigger movement upwards, but also it's relative. Understand the price levels. Yes, it looks smaller, but really the change in price was bigger. Okay, so all in all, you see they're moving in tandem. They're readjusting in live. Right now, they're literally almost tied to one another. So stock picking market now sectors might rally. Is this in this AJJ? How can they rally if it's almost like saying I can drag away an elephant or compete with the bus? You know, it doesn't work like that. It's like saying you can outwet a tsunami with a bucket of water. It doesn't make any sense. The assets play into the context of the market. It's only when you have several very strong assets such as Nvidia, Apple, and other ones overburdening, kind of taking almost forcing the market. But then even then, what you will end up with a result of, it's almost this artificial fake sideways movement, which in essence, instead of breaking down, is just retaining sideways movement. So it's a bit of up, a little bit of down, a little bit of up, a little bit of down. All in all, it sort of results in nothing. In other words, when you zoom out, you realize, oh, it's just sideways. So again, for example, if you look at the chart this way, oh, the market looks up. That's because very childish perception. If you look objectively, we've been moving sideways, but all in all, it's downwards, and that's normal. Again, because every time the market doesn't just move just up or just down, people who've been in the market for longer than they should know that by now. So the assets cannot contradict the indices, literally. Gotta go. My pleasure, nerd. Was thank you for stopping by and hanging out with us and all that. SC, I have to rewatch the video. You're all more than invited to rewatch the video. It's gonna be there. Feel free to watch. All right. Well, ladies and gents, at this stage, I think I'm gonna finish the video. If we have no further questions, I hope to see you on the Discord. Those who want to take the next step and become part of our membership, I say our because, again, when you do sign up, it doesn't matter whether with Tom's Patreon or mine, you get access to the Zoom calls when we have them. This month we're going to have less Zoom calls, or probably not at all, because Tom is abroad and having a vacation. I myself have a birthday towards the end of the month, and I will be taking a vacation towards the end of the month and a tiny bit of September, the beginning of September as well. I will try to keep you up to speed, but I will do less videos, guys. Sorry. I do need to celebrate my birthday as well and have some fun. That's it. Love you all. Thank you for showing up. Like, subscribe, share, all that wonderful stuff. Discord, very important. The links are in the description below. Very important. If you join Patreon, make sure you go to Discord, because Patreon is just a gateway to the Discord. The headquarters itself of things, our community and all of it, everything will be found on Discord, not Patreon. Patreon is just a gateway. It's just a way to regulate and have people just get the right roles and all that sort of stuff. So don't get caught up on Patreon. Patreon is just part of the process. If you have any questions, reach out to me on Discord. I'll be more than happy to help out and talk to you. Have a great day. Well, rest of the day, everyone. Cheers. See you on the next one.